Good morning, good afternoon, good evening. Hi, Scott. Sir Isaac Newton Day. There still is gravity, even in S&Ps. Okay, so, we have the Fed, and first target that we've been talking about here in FACE was achieved last night at 3260. We're extending this decline. Looks like a second drive developing here. I think that if you missed it, there's going to be an opportunity that perhaps we rally it into the Fed. Hi, Sinatra. We'll see. Anyway, you have a nice gap when you look at the daily, and you don't see that anywhere. It's the biggest gap on the chart going back, I don't know, years. And what happened in NASDAQ, you haven't seen for a long time on Friday. A key reversal. Okay, took out the previous day's highs, lows, closed underneath the lows, pretty good follow through. So corrections underway. I actually think that this will take some time to play out. And this certainly looks like a magnet in S&Ps on the daily, this 3,200 level. You have the 50-day coming in there. You want to see the weekly? There's a weekly for Forex scale. Okay, so we didn't have a 2-week reversal yet last week, but I do recall saying 2 days in a row, sell at 33.33 with a 10 handle stop. Blake's been short, taking heat, now being rewarded. I'm not sure if maybe we did. Let's see. I think this is the last day, everyone, of our promo. Okay. I wouldn't be surprised if it was booked. Real nice trade. Blake was pounding the table, up 1%. Andre up 1%, caught the DAX. Pretty good team here at ForexAnalytix, don't you guys think? So what you hear in FACE is, I think, pretty priceless. And then multiply it, becoming a member, and hang out with everyone in the chat room. So some nice trades working. I'll let Blake update you on what he's thinking, and Steve. So anyway, you guys knew we were bearish. We were early, but even at the confluence area that Blake talked about, 33.13, now that is now, I don't know what, 67 handles in the money now. And this is a chart to watch. I don't think any of this stuff is over. The plunge protection team will come in today, sometime today, when the market is under pressure. Okay, the robot. I think this is the most important chart. Hi, Glenn. That's your weekly. That's a 10-year note. The 30 broke down before the 10. But I think everything that started Friday, just a guess. I wouldn't fade it except for little, short-term trade turns until the 10-year note makes a new low. Okay, and we still have quite a bit to go. Could accelerate from here. I don't think we're showing today's action. That was Friday. So also, until we get here, I wouldn't look to start buying the dip in S&P or shorting gold or buying the yen. I'd wait for that. And something else that manifested was this TLT. Remember, I was talking about all the compression that was being built up here. My bias was to the upside. We have an upside breakout. And I do think we're going to make a new high here as well. So, if you didn't catch it, last week doesn't mean that you're late. I mean, your entry, you want to finesse. I don't think you want to chase anything today. But between here and here, there's lots of room. And between here and here, there's lots of room. So look to sell rips in yen. That was something else that I don't think anyone that's been listening to us got caught the wrong way on this false breakout. Okay. So even if you didn't sell it up here, back under 70 was a reason that there were problems. So, you know, maybe we'll get a pop into the Fed. Be nice to see 109.70 one more time, but who knows? Anyway, guys, if you haven't yet, something that you need to do. I have Jay Vala with us later on today. He talks about layup trades. I don't know. Yeah, there's sometimes that they're easy and you have immediate gratification, but we'll see what a layup trade is. You know, what happens when the layup trade, the shot is blocked. That's what I want to know. So let's have a great week, everyone. Who's up for a great week? In fact, I wouldn't doubt that you already have a great week with what happened last night if you came in position on that narrative. So one other point I want to make as a coach, you know, when you have windfall profits, sometimes you get sloppy because you hear this message in your head, oh, it's the house's money, right? So you go, oh yeah, you know, it's only the house's money. You know what? It's not the house's money anymore. It's yours, and protect it. Okay, everyone. I'm going to bring Blake in, see what he's doing with this. I know we talked about the coronavirus in the week ahead video, and this was all within your expectations, buddy.
Yeah. Hey, Dale.
Hey, buddy.
Good morning. Happy Monday.
Yeah.
Yeah. So, you know, what you were talking about, the patterns in play. I got a little cutesy with the S&P as I adjusted the stops too close. I didn't expect last week for a 30-point S&P bounce before we rolled over.
No.
But I've been short the S&P since myself personally since like 32.89.
Yeah.
So, you know, it's small, you know, I'm just sitting in it, but I did, you know, I took my Euro Aussie off the table today as we are at the neckline right now. You can see we're right at this neckline at this big, you know, you can call it an inverted head and shoulder pattern, but we're at the 38% retracement, real big resistance here. I, you know, think we can continue to go higher, especially with the nature of the reason why it's moving higher is obviously the coronavirus and you know, risk aversion, and I think the Aussie is going to continue to trade weak. I took it off though this morning at 82 as we were up against this neckline, and I do expect it to break out. But what I'm hoping for is I'm hoping for a little pullback first before we break out. But you know, I may not get it. It just may. You know, just, you know, rip right through this resistance, and we might be trading.
Did you see any support in the yen down here, Blake, before it bounced a little bit? I know you're
dollar
working
yen?
the short side there. Yeah.
You know, the dollar yen, we've got, we're at the 50% retracement. You'll see it here. Let me pull it up on a different chart here. Here's a 50% retracement, and we're just kind of consolidating. We got a gap.
Yeah.
Kind of unsightly gap. I'd rather sell rallies now,
right.
But you know, the question is, are we going to get a rally in the US dollar, Japanese yen, and let, you know, those of us that want to be on the short side back in? So
maybe the Fed provides that opportunity.
What's that?
The Fed this week, maybe they provide the opportunity.
Perhaps. You know, I think you're going to have, you know, traders that are a little nervous about establishing new dollar yen trades ahead of that. But I mean, if the situation continues to worsen in China, which it's not getting better from what I can see, we might not get that opportunity, at least not right now. And so, you know, we could end up trading back down towards this 108.50 first. You know, we could do this down here first before rallying. So it's going to be it's interesting to see where we're going to go from here. You have to be a little careful if you weren't participating in this move overnight or over the weekend. Then it's definitely harder to start establishing positions here. So you know, a couple of the highlights I'll give you guys that I think you should be paying attention to is, first and foremost, in the S&P, we are trading at a 618 retracement. We are at the trend line support. So you know, do I think the S&P can bounce here? I do think it can bounce here. But the last thing you're going to catch me doing is trying to buy the S&P at these levels. Now, it may be the better trade of being long or short right now is to be long for a bounce, but I'm not willing to take on that risk. What I'd rather do at this stage is I'd rather look for a bounce in the S&P and then maybe look to sell a rally back into the 3280 level if we can get it. You know, but I just don't know if that's going to happen. And, you know, this virus is, I think it's a pretty serious situation from a economic standpoint. I think it's going to really have a negative impact on, you know, definitely Chinese GDP, but more importantly, probably, you know, global GDP. That's going to be the bigger risk. And so at this stage, you know, like I said, I don't know if I'm willing to stand in front of the freight train right now and just, you know, start buying the S&P down here. I do think that there is a risk of it, you know, rolling over and kind of, you know, heading lower in an aggressive way. But we are at a very critical juncture to see where the market's going to, you know, if we're going to break down or if we're going to bounce. So I think you got to be a little careful here. The euro's trading pretty heavy. I'm surprised the euro's as heavy as it is, but you know, I still feel that the euro is at risk of a bounce, you know, as we are at the 618 retracement. The lows today are two pips away from the 618 retracement. So the euro might be at risk of a bounce. Now where we can bounce to, you know, I would think, you know, maybe the 110.50, 110.60 area is doable for the euro. You know, and like I said, I would not want to be short the euro down here, but at the same time, it is not bouncing. It's trading very heavy. The cable's kind of doing its own thing. If you look at the Aussie is getting really close to like this horizontal support down here. We're getting oversold in the 4-hour, but support, you know, probably for the Aussie dollar is going to be somewhere in this neighborhood, somewhere down here around 67.50. You know, again, am I willing to, you know, try to take a long down here? No, but that's one of the things that have prohibited me from taking a, you know, from continuing on long with my Euro Aussie, is knowing that we're so close to this Aussie support down here. So that's a little bit of a risk. The Kiwi dollar, you know, finally broke down, but it, you know, the Kiwi hasn't really broken down. I mean, where we're sitting at right now, if you take a look at the daily trend line, we're coming towards really key support. So let's just draw this out. Oops, that's not how I wanted it to draw. So I have to click that. There we go. So the Kiwi, you know, we've got a confluence of support right down here around, you know, 65.40. So even though we're coming under pressure right at this moment, I have a little bit of a hard time trying to get too short, knowing there's the 38% retracement. You can see it right here, the, you know, 65.44 trend line down here, another trend line down here. So we're coming right in, you know, I guess you could say horizontal support as well. So we'll see what the Kiwi does down here. One of the standouts, in my opinion, is the US dollar Mexican peso. which, you know, we did a false breakdown last week. We're now above channel resistance. A break back above 19 is going to be very bullish for the US dollar Mexican peso. So just keep that in mind. If the US dollar Mexican peso continues to rally, the one of the reasons why these, you know, whether you're talking about the peso or talking about the rand, or, you know, even the Turkish lira is actually a little weaker today. They tend to rally during periods of risk aversion. So we're getting that, you know, reversal in the dollar Mexican peso, and I think above 19 is going to be really quite bullish. I wouldn't want to be on the short side of this. So let me just say that right now. And I know the attraction of buying pesos, being short dollar Mexican peso because of the carry trade is very, you know, it's very lucrative. But, you know, a carry trade unwind is just going to lead to, you know, a much bigger reversal here in the dollar Mexican peso. I was talking to a friend of mine who lives part-time in Mexico, and she was she's a really good friend of mine's mom. She just sold, her and her husband just sold her business, and she had asked me, you know, hey, you know, should I be converting this back over to pesos right now because it's been a little stronger? I'm like, you got to be. And I told her this weekend, I'm like, you have to be a little careful because if this coronavirus ends up being a little bit more serious than the market expects, we could see, you know, further Mexican peso weakness before strength. So in other words, we could, you know, see a move back up towards 1950 before we head back down. So you just have to, you know, really monitor the situation. It's very fluid, and for them, it could mean a lot of money based on what their business was sold for. So, you know, I just kind of, you know, when they contacted me over the weekend, I'm like, yeah, you got to be careful that the, you know, peso may weaken here. You might want to keep it in dollars for now, because they want to convert back over to pesos. So anyway, but like I said, the dollar Mexican peso at 19 is going to be pretty important as far as I'm concerned. Now, you know, we talked a little bit about the yen. You know, the dollar yen, you know, this is broken. I actually want to sell dollar yen on rallies now. What I'd like to see is I'd like to see a rally back towards, you know, 109.20, 109.30, somewhere up in this neighborhood. The real question is, are we even going to get it? Is it even possible that we get a rally back up towards, you know, those levels? Everybody expects a gap fill. I mean, we will fill that gap at some point, you know, but it doesn't have to be today, and it doesn't have to be tomorrow either. We could, you know, it could end up being a month later before we fill this gap, or longer. So don't get all caught up in the idea that that you know, it's going to be just a quick gap fill. Oh, you know, we didn't talk about the loonie, but I should talk about the loonie. So this reversal back into the, you know, into this triangle, this should lead the dollar Canadian much higher. Okay, so I think the dollar Canadian trades much higher now. If you look at crude oil, you look at risk aversion, I think that the dollar Canadian is a currency pair that you want to be buying on dips now. This you know, even with Friday's stronger Canadian retail sales, it still was not enough to stop the dollar Canadian from breaking higher. So this dollar Canadian is very bullish now. Do you buy it right at this moment? I don't know, but I would be probably buying dips. You know, while it's above 131, I don't think you want to be on the short side now. So, you know, as long as we trade above 131, it looks like we're going to continue to grind higher. I played the Euro Canadian on the long side over the weekend. You know, and I took my profits already right around where we're currently at. You can see this Euro Canadian, because I believe that there's going to be a bigger euro squeeze. So I think that the Euro Canadian is a good long, and I took it off as soon as I got up, because we were right here at this, like, you know, it was challenging the highs. It hadn't really, you know, it was just kind of knocking its head right up against the high 30s here. But I still think that this is a, buy the dip type of scenario. I am still trying to buy dips in the Euro Canadian when I can. I'm hoping that the Euro might dip below 110 first, but we may not get that opportunity. This currency pair could continue to rally. So I think that is the risk right now. But let's pay real close attention. I think today is the day where we really watch. Hold on, really quick. We really watch the S&P here, and just see what we're going to do at these levels. This is like I said, it's the 618. What I'm hoping for is I'm hoping we get a little bit of a recovery rally in the S&P first before we make another move for this trend line, because this trend line is going to be an important trend line for bulls. And it really has been support since October. We haven't been able to break back below. We are still, if you look at the structure of the S&P, we are still making higher highs and higher lows. And until we break below 3180, it's still a bullish market, right? So you have to take that into consideration. Like I said, I'd rather sell rallies now than buy dips. But for those of you that are maybe a little bit more adventurous than myself, you might be buying the dip here and thinking, hey, we're past the worst of this. It's going to get better from here. If that's your attitude, then that's fine. Your risk if you're buying the S&P at these levels, and that's all we can really ask for. When we trade is, I know where my risk is, and I'm, if it goes below here or above there, I'm going to get out. So in the S&P's case, I probably wouldn't risk below today's lows. Below today's lows should really open up, move below 3,200 now. So that's kind of what I'm staring at and looking at with the market. I'm a little indifferent about the euro, but I know that the euro is right at the 618 retracement, and like I said, risk aversion. I'm more prone to believing that the euro is going to squeeze higher as the market liquidates some of these carry trades. There was also a report over the weekend that of the CFTC report, and I need to go back and do a little bit more research because I haven't had a chance this morning, that the shorts are, speculative shorts for the euro are at the, most aggressive levels in months. So I'm going to go back and do a little bit of research on that. So we'll see. But what I'd like to hear from is I'd like to hear from Stelios and Steve and see if they've got any opinions about where we're currently trading in the markets and what they're thinking. So good morning, guys.
Good morning, Blake.
Good morning, Steve. How you doing?
I'm good. How have you been?
I'm good. I'm just I'm just sitting here trying to figure out what the heck I really want to do this morning after this move. This move was really expected in the S&P. We had that big confluence, the 161% extension, the multiple 161% extensions of that really took us to where we're at. But I'm kind of questioning what I should be doing at these levels. What do you think? Here.
I'm with you. I think in the short term, selling any rebound, I'm still holding my full short position, but I'm looking to offload it. No, I'm actually looking to offload part of it at 3180. So I think in the short term, sell the rally makes sense. But as I was writing earlier in the chat room, I'm a little bit skeptical about if this can actually be the beginning of something bigger, because I don't like the fact that it's very, very much event driven on something that isn't directly related to the market. So if we get any positive news or whatever, the market is going to immediately shrug it off and rally to new highs. So it's not economy related directly. Of course, if this proves to be hopefully not, because I wouldn't want to see a big sell-off because of people dying or whatever. But if this proves to be like a bigger shock, like a much more fatal or dangerous disease, or as dangerous as the market is trying to price in now, then it can prove to be something bigger. But I think we need to be a little bit bit more patient to find that out. I mean, we've had several diseases during the past like couple of decades that the market was worried about temporarily, and all of them proved to be not that important. Not that
Right. Yeah.
linked.
And Forex Gal wrote, "Is this our black swan?" It could be, but let's hope not. And that's the one message I tried to get across to our chat room on Friday afternoon. I'm like, everybody's been waiting for this black swan event, and I hope this is not it, because this really is, this is, at the cost of human lives. And
Not to
Yeah.
worry, Blake. Bill Maher, I know you probably don't watch him.
yeah,
do
of
you?
course.
You do? Okay. Well, he said they're very close to a cure for it. They're just trying to figure out how to squeeze the lime into the IV line. Goes along with your coronavirus.
That works for me usually.
Yeah, all right. Anyway, so don't worry, guys. If you could get lime juice in your IV, you're good, according to Bill Maher. All right.
All right. Well, yeah, I'm with you, Steve. I think we need a little bit more time to see and assess, how this is all going to play out. I think you have to be very careful. If you're positioned right now for risk off, meaning that maybe you're playing the dollar, maybe you're playing the yen, maybe you're playing the S&P, maybe short copper, short oil. I think you have to be really careful where we're currently at. I would not want to be aggressively short at current prices, because
I'm sorry, Blake.
No, I was just going to say, I think there's a risk that we get, some sort of bounce here today. And remember, everybody's like, oh, turn around Tuesday. Well, we could end up, being break even by the end of the day and recover most of our losses. Like, the S&P is down 1.5%. We can end up the day just down 0.5% and then get a reversal back down tomorrow. And that could be our turnaround Tuesday, as we had a bounce on Monday from these levels and then turn around on Tuesday lower. So just, that's why I'm more in the camp that this is going to happen versus this. You know what I mean?
It's a very likely scenario.
Yeah.
Remember, we were talking that once the market sold off and we saw risk off, we would finally know what kind of impact it would have on the dollar. And besides the yen acting like we would expect it to act, do we really have an answer as to whether the dollar is safe haven or they're going to sell off the dollar? Because, decent sell off, and it's not clear to me. Is it to you?
No, it's not to me either. And that's why I'm like, I'm surprised that the dollar has been, well, let me restate that. I'm surprised the euro has been as unchanged as it is. I actually expect the dollar to weaken. Then that was my opinion on the week ahead video. Is I expect the euro to start to strengthen here as some of these carry trades get unwound. It has not happened yet, and so maybe it is because of the Fed, and I also think it's a lot of positioning too, because at the beginning of this year, just 3 weeks ago, everybody was a staunch dollar bear. That was the trade of 2020. Everybody got a little wrong-footed because of just the dollar reverse. Then Lagarde last week, just added fuel to the fire. So I think that's really why the reason why the euro is trading so heavy right now. But I think we might have to wait for the Fed to see any definitive direction in the dollar. So I wouldn't want to be short here. Let's just put it that way. I know it's got a head and shoulder pattern, but while we trade above 110, this dotted line right here, I wouldn't want to be on the short side. So
2020 is a long time. It could still end up being the trade of the year, but maybe
it really can.
Maybe from par or 102.
Yeah, I mean it's quite possible, and the dollar index is struggling here at the 50% retracement. I mean, I know we're right here, but in all actuality, I mean, the dollar index can make it all the way to 98.20 and still be in a in a down channel. So
nice look.
Yeah,
I like that channel.
All right, well, I'm going to pass it over to Steve, and I don't know where Stelios is at today, but that's all right. Steve, I'm going to hand it over to you. But let me mention that today is we had extended the end of or beginning of the year offer. We extended it over the weekend, and you know, we decided early this morning, let's just run until the end of today, just get any stragglers that wanted to take advantage of it. But it goes away today, so take advantage of it, and look forward to seeing you guys in the chat room when you do. So, all right, Steve, it's all yours, man.
Thank you, Blaker. So last day to take advantage of the offer, as Blake said, and you know, not the last day that you can take advantage of, you know, actually taking part of the reimbursement program, which is definitely worth it. Because in essence, you get, you get your ForexAnalytix subscription subsidized or cashback for actually doing nothing but doing what you're trading anyhow, which is, you know, trading. I seriously recommend it. And in any case, you can also get some free information talking to the Forest Park FX guys, finding out if the broker you are in actually benefits you the most, you know, for your trading style, account size, etc. So, Coach, we have a lot of things to talk about, but any preferences where you want to start from? I think I actually know. So, quite a lot of things have moved, and quite a lot of things actually have produced some, you know, neat technical developments. One of them is definitely the impulsive continuation lower for crude, breaking through this little triangle. But you know, keep an eye on this trend line support. Passes from 51. I think that we might see some, you know, reaction from that level. Exactly the same way. I suppose we might see a reaction from the S&P if we reach 3180. And why 3180 specifically, which I mentioned before when we were talking with Blake, because looking at the short-term picture, this is like the 4-hour chart. As you see, I was monitoring this ascending wedge. We broke below it, we retested the high, so in essence we formed a double top there, and once we broke through that as well, we accelerated lower. And you know, technical analysis theory suggests that we should fully retrace an ascending wedge at the very least, which should bring us down to 3180. So that is why I'm looking for the 3180. Now we remain a little bit stuck for a few hours here at the 61.8 of that last move higher, but I do think that sooner rather than later we're going to see lower prices. As you see, the same deal here with the Nasdaq. I haven't updated on the 4-hour chart recently, but that was what I was looking for anyhow. So that would imply for the Nasdaq a move down to 8,665, whatever. First area of support, as you see, previous breakout area at 8,888. But I do think we can move lower from there. And as I said, retracing the wedge, let's fib that as well. 61.8, a little bit higher than the first level we talked about, and then 8,658. So I think, you know, those are well on their way, playing out very nicely with divergences. Let's go back to the daily. The VIX, we talked about that. It was forming another fractal formation. I mean, we've seen this formation form again and again in the VIX. We still have the long-term divergence. You can notice it also in the RSI, but you know, you can clearly see it, you know, in price, in the price of the VIX. And you know, once it keeps coiling, at some point, you know, the range becomes very tight, and then we got some, you know, explosive move to the upside, which usually is short-lived because we remain in a bull market. But you know, the vast majority of the times we at least reach the 25 area. So I'm expecting that this breakout in the VIX is still rather fresh. I mean, it should have a few more days of upside to run before we can be, you know, looking to bottom pick this market. Now the DAX, and that was a beautiful trade from Andre in the Patterson play. The DAX was also showing divergence, and as I wrote in the end of week analysis, we had the DAX testing a confluence of resistances. It was, first of all, this double top area that was, the all-time high. It was this ascending channel trend line resistance. It was also the 127% extension of the last corrective move lower. So very beautiful rejection from there. Of course, for the DAX to, show some follow through, I would want to see it break through this blue ascending channel, which is, quite likely. Then we can see like a deeper corrective move. FTSE, more or less the same deal. False break higher from that trend line. Of course, that trend line was, a little bit arbitrary. I was looking at the possibility of, some type of diamond formation forming there. So, it was still early, so I wasn't sure how to draw it. But let's see what happens. I mean, now we have a more solid trend line because we have 3 points that it passes from. So let's see what happens from here. But definitely the fact that we're breaking through this confluence of resistances now might act as support at 7,450 is also a bearish signal. Then I would pay attention to this trend line support, to expect more weakness. I would want to see that break to the downside. Now, the yen, of course, continued suffering after that rejection from the long-term descending trend line, and the combination of the fact that the Aussie, couldn't hold, this confluence of supports, and the reason is obvious. I mean, we have a risk-off event that the epicenter of this is in China. So, it was very tough for the Aussie to hold if we kept on getting bad news. So, it barely managed to hold, for the end, during the end of last week, like Wednesday, Thursday, Friday, we actually closed just below it. And yesterday night, we spiked lower and never looked back. That has now officially, of course, triggered the head and shoulders formation that we had up there, which, targets once again the previous lows above 66 cents. And as you understand, one of the worst performing pairs, of course, if you combine the two of them, is the Aussie yen. So the Aussie yen, I was monitoring this formation as a corrective rebound formation. We got rejected at the confluence of the 61.8 of the last move lower and the quality target there. And now we've actually broken through this ascending wedge, and that is definitely a bearish development. I think we should be looking for more weakness here. In the same deal with the Kiwi yen. The Kiwi yen was trading within this ascending channel. It broke through it. It gapped through it actually yesterday night, and a daily close below it, which at the moment looks very, very likely as a scenario. I think it's going to open up, a decent move to the downside. I think we can easily find ourselves back to 69, and who knows, even lower than that. So obviously, the yen pairs, are in the defensive today. Even if you have a look at the euro yen, that also is breaking below an ascending channel. I also think this move was corrective. I mean, it did look corrective. It had all the corrective characteristics. RSI was diverging since this second high we had there. Then we had another, 2-3 highs, and that's it. Now it failed. If it closes below this channel, which looks quite likely, I think that euro yen can keep pushing lower in the days ahead. And the pound yen is the only of those majors against the yen that hasn't yet broken down from this ascending channel. But if the risk of mood continues, I don't think that pound yen can escape the same fate, breaking down from there. Of course, somebody wants to short weakness, that you don't want to short strength. So obviously, by seeing all that, the rest of the yen pairs are preferable to short than pound yen. I mean, it's the only one that hasn't done the move yet, so it might continue to overperform the rest. Last but not least, the CAD yen, also one that was interesting. Same deal here as you saw with the Kiwi yen and the euro yen, which means it was holding this ascending channel until it gapped lower yesterday night at the open. Let's see if we can confirm a daily close below it. I think we can be looking for more weakness in the days ahead for the CAD yen. So the vast majority of the yen pairs have started producing interesting developments. Having said that, another proxy for risk, the Euro Swiss, still pushing lower. We're now at levels we haven't seen since April 2017, and below 1062, we're going to be getting to levels we haven't seen since 2015, right? So now, as I was saying last week, I know that it's not easy to fight the S&B because we know that the S&B is going to defend this pair. I mean, they haven't even tried hiding the fact that they're always intervening in the FX market. So I know it's not tough to be short this pair because at any given point you can blink and find it like 100, 200 pips higher. But unless they do something dramatic about it, the next downside target is the 161.8 of the last rebound, which comes at 165, 1065. I think we're gonna make it there at the very least. Now let me open the question box and see what you're looking for. Good morning to all. Your USD, yeah, Blake covered that. Forex Girl. What has coronavirus to do with the Aussie? The Aussie has to do with the fact that the Australian economy is very, very closely related to the performance of the Chinese economy. So it has to do with that. I mean, we already know that China is the epicenter of the coronavirus, and a slowing of the Chinese economy, if this issue persists, is definitely going to affect the Australian economy. So, combine that with the fact that Australia has been burning to crisp for the past 3 weeks. So, another big event that has been hitting the Australian economy. And I've said it before, please don't listen to BS of the kind that big distraction like an earthquake or a typhoon or hurricane or a big fire is good for GDP growth, because it's horrible for GDP growth. Yes, temporarily you're going to boost GDP by fixing some of the damage that is done, so that is going to show up in the short term in the GDP. But it's basic economics. Of course, the vast majority of the people on TV don't understand basic economics because they've drank the Keynesian, not Keynesian actually, because Keynes wasn't stupid, the meta-Keynesian Kool-Aid. So yes, you might boost temporarily GDP by fixing some of the damages, but that doesn't actually boost economic performance. The only thing you're doing is you're spending resources to restore what you already had. And you're doing that by incurring debt, etc. So in the long run, having factors of production destroyed and having to replace them is never a good thing, right? It's always a bad thing, always, no exception to that. Because the same kind of government spending you could do to get yourself something you didn't have. So if you are to go into debt, you'll better go into debt by putting more resources in the economy, in production, and not having previous existing resources being destroyed so you can replace them. Black Swan, as I said, it's too early to call that. We have a question about copper, and I have no idea how I forgot to mention it, because yes, copper is one of the important developments, and the reason is that it has now broken through this ascending channel, which means that you should expect more weakness from copper. I mean, this rebound anyhow wasn't impulsive in nature. The move lower, though, seems to be impulsive in nature. I mean, we've had during the past, 2, 4, 6, like 8 trading days, almost 10% of the price of copper being saved off. So I would expect that copper should remain in the defensive, at least in the short term. Now, watch this area as support, but I think, any rebound should be sold following that. At the same time, of course, other metals are suffering. For example, palladium. If you remember, I kept saying again and again that keep in mind palladium is going to be a risk proxy, and don't think that we cannot have gold going up and palladium going down at the same time. And I was saying that to advocate that, listen, gold has a bull flag, and the fact that I'm expecting gold and silver to move higher doesn't mean that I don't like my short palladium thesis. Actually, I'm still short palladium. I'm now, quite nicely in the money. My cost average is at 24.25, and I'm expecting more weakness to follow from here. So I think that as long as we have risk of palladium should underperform, especially the other metals, no question about it. Here's the palladium.
Maybe back to that throwover, Steve, on the palladium chart that you had up there.
No, that's not it. Give me a second. I'm looking for the palladium gold. Is this it? No, that's... we'll build it. So XPT USD.
Build it and they will come.
Yes, exactly. So here is XP. My mistake. XPD USD. Okay, there it is. So here is the palladium gold. Look at this.
Yeah.
Yeah. It had literally gone vertical, right?
Yeah.
Just look at this RSI reading. What is it?
150.
Above 90. Yeah, whatever. Yeah.
199.
Yeah, whatever.
1,000.
Something like that. Yeah.
We had our millionth and one divergence in the S&Ps before they fell.
Oh yeah, but keep in mind that one thing has been consistent, right? Which we've been talking about again and again. The VIX divergence, right?
Oh yeah.
The VIX divergence.
So what do you think? 25, Steve, back to the top of that triangle. It's like there's a triangle within a bigger triangle.
I think that I'm going to extend my bet with Ures. I'm going to give him the opportunity to double up on our last
two dinners
on our last year's bet.
Time?
Yeah, either he owes me 2 dinners or we're even. I'm going to bet him that 2020 we're not going to see single-digit VIX again. So let's see if he's going to take that.
Okay. All right. So what do you think? Do you have a target that you could come up with?
As I was saying before, you were absent. The vast majority of these fractals, because it's a fractal behavior, make it to 25. So I think that we should at least see 25.
Okay.
In the VIX, in whatever spike lower we have, and for how many days it lasts.
There are plenty of shorts in the VIX derivative.
More than plenty.
Not like last year. Extreme, but
I think many learned the lesson of not being aggressive with that.
Yeah, they're working at Burger King. That's a good way to learn a lesson,
it is.
You blow out your account and then you go work for 12
Or at the very least, once you're working at Burger King because you've blown up your account and your client's account being short the VIX, at least you don't have money anymore to be short the VIX.
Yeah, and no pressure.
Yeah, exactly.
Except when you have to pay your bills.
Hey guys, could you please check Euro NOK and use this SEC weekly chart? Head and shoulder could be forming at the right shoulder soon. Yep, let's have a look at it. But first, since you mentioned it, I took off, as you know, those of you that watch the webinar, I took off both half of my USD NOK and half of my Euro NOK shorts because they were testing important supports, and the other half has been stopped at a little bit of profit long time ago in both cases. But I have to admit that the fact that we are rebounding in such a manner and we held so important supports makes me very, very skeptical about the short side. I mean, I made nice money to the short side, but I don't like the fact that what started as a corrective likely rebound has now punched through these channels, so it doesn't look that corrective anymore to me. So as you see, USD NOK more or less held this long term. I mean, we had a little overthrow below it, but it has held the ascending channel that it has been trading within since the beginning of 2018. And Euro NOK, here it is, and Euro NOK did the same thing with this long-term ascending wedge. It held support. So could those be forming head and shoulders formation? Especially the Euro NOK looks better to me between the two of them at the moment, right? I repeat, at the moment. So could this be, we don't even need to go to the weekly chart. I mean, you can obviously see it here as well. Could this be a head and shoulders formation forming here? Yeah, it can, right? But in any case, what remains as a technical fact is you want to see this long-term ascending wedge break to the downside, which is actually higher than the neckline of this head and shoulders formation. Or in the case of USD NOK, you want to see that long-term ascending channel break to the downside. So head and shoulders or not, we definitely do have important technical indicators in the form of those two trend lines that will tell us if this can prove to be, a rebound at the very beginning of like a bear market, or the bull market is still holding up quite nicely. So that's what I think about Euro NOK and USD NOK. And you also mentioned USD SEK, so let's have a look at it. The situation with USD SEK is somewhat similar. I mean, I was looking at this rebound initially as very corrective, but we now overthrown this, retest of the head and shoulders neckline, because don't forget that we already had a neckline and a head and shoulders formation in USD SEK. Actually, we had two formations at the same time. We had this ascending wedge, which broke the downside, but we also had this head and shoulders formation, which is now invalidated because it never reached the target. The target was down there at 910. So as you see, we've now invalidated it. Of course, somebody can say, and you'll be right, that we haven't invalidated yet the breakout from this ascending wedge because we're still trading below it.
That's
now,
what I would say.
Yeah, admittedly, between those three, meaning the Euro NOK, the USD NOK, and the USD SEK, the USD SEK does look the weakest. So if you're looking to be short one of those three, just by looking at this chart, I would have to say that you have to go with the USD SEK. The next upside is
trade selection is everything, right, man?
Yeah, absolutely. By the way,
isn't that why
your microphone?
Isn't that why we spend time analyzing and screening to find out and diagnose what is the laggard, what is the leader, what's showing relative strength, what's showing relative weakness,
Exactly.
for our preferred longs and shorts.
Exactly, because in my opinion, something simple that even a chimpanzee can do, and actually I can argue that a chimpanzee probably can do it better than the average human amateur trader, because the chimpanzee would approach it with a lot less sentiment and clear psychology than the average human has. There are two things that you can very, very easily do in trading. Now, assuming that you can get your psychology in check. That's why it's important, keeping a trading journal, putting down your thoughts, because once you do that, you can detach yourself more from a trade. Once you have formulated an actual plan, that means that then you can more easily see it come into fruition without trying to intervene every now and then. Because if you go in a trade without having a good plan, or by having a very abstract plan, it's very easy to keep changing the rules. Now, if you have the rules put in place since the beginning, you are much more disciplined in handling that. So what a chimpanzee can do even a chimpanzee can do are two things. First of all, make sure that you enter a trade that has the proper risk-reward ratio. I mean, this is simple mathematics that you learn in elementary school. And the second thing you can do is that at least make sure that, you know, the two pairs you decided to trade one against the other are a decent choice, having to do with what Dale just said, meaning, you know, why try to be short a strong currency against a strong currency? It's more of a coin toss, right? Why try to be short a weak currency against a weak currency? Same deal. Why try to be long a weak currency against a weak currency? Same deal. Why try to be long a strong currency against a strong currency? Same deal. I mean, you want to find something that is clearly overperforming, pair it up with something that is clearly underperforming. You know, make sure that there is also some nice technical formation in place that can give you, you know, a decent risk-reward ratio and, you know, some non-arbitrary targets, and, you know, follow that. Right,
You're
Coach?
a natural teacher.
I don't know about that, but I try to.
You are. Yeah. So I also want to let you know, Steve, that our guest today had a family emergency. So
Oh, sorry to hear that.
You can go. You know, there's no time on it. You know, I am getting a question. I don't have the link. Onafad Ridwan said, I joined late and missed some part. And I get this question all the time. You know, is there a video available for download? So maybe you could post or show people that if they miss it, don't worry about it. You know, we know that people miss things.
You have two options about that. One, you can go to YouTube, search for ForexAnalytix, right? Oops, sorry. And you'll find our channel, which already has more than 2,000 videos. Congrats, Coach. You are responsible for many of them.
I think I've done about 600 interviews or so. We're coming up on the 3-year anniversary in April.
In April, yes. In April, we'll have completed 3 years. Yes, that is correct.
Where's the party again?
Assuming that it's roughly, what is it? It should be close to 250, I guess, per year.
Yeah, something like that.
Definitely more than 200.
Yeah. Oh, yeah. Probably more like 5, 6, something like that.
Yeah. So you can find them here in playlists and categories, but you also have the alternative. If you go to the ForexAnalytix website, there's a link here called Webinars, and up here in the tabs you can find videos in chronological order, or you can simply go also to playlists, which you're going to find, you know, the videos in playlists. You can also find here the scheduled videos for the days ahead, okay, and past interviews.
We should put together a package of like the 25 best interviews in the last 3 years.
That's actually a good idea, Coach.
Yeah. Okay. All right. So
let me go through. Yeah, Aussie, Kiwi, I covered those. I'm very negative on sterling. I'm position short cable target 127.50 and long euro pound. What do you think? Okay. What do I think? I think that being short the cable here is a dangerous thesis. Not that it can't work out. It can probably work out just fine. But I see no risk reward being short the cable as long as it trades, let's say, above 129. Okay, because you are targeting 127.50, right? Which I agree with you. 127.50 is going to be tested as long as we break through 129. Okay, so I don't know what your risk reward is here. If your risk reward is, let's say, above this spike high that we had on Friday, okay, I mean, it's a very manageable risk reward ratio and it's fine. Now, if you have like a 1-to-1 risk reward ratio with 127 being the target, I think this is a less than 50% probability trade. So I will be very careful about it. You can also see here that we have a series of higher lows, right? Until we can break through this series of higher lows, the path of least resistance remains to the upside. as I said, it can go either way, but from a risk reward perspective against 129, being long makes more sense. Personally, I'm not touching it because, I mean, it's still consolidating, it's coiling, so, you know, no reason to, you know, to try to trade it at the moment. As I said, what you're looking for, 127.50, is going to be a very, very good bet once we slice through 129. But until that happens, I'm very skeptical about it. Now, having to do with your long position in euro pound, which is a totally different story because this has clearly to do with over or under performance of the euro against the pound, you can easily see more upside as long as we see this channel breaking. Now, against Friday's low, it makes sense being long the euro pound here, and I like it more than the short pound position because we tested the 61.8, we held it, and you know, if we end up breaking through this channel, I think we can see quite a nice follow through to the upside to complete something like a bigger correction. So I have to say that between the two positions, I personally like the euro pound more. Now, as we speak, I wouldn't open a position in either of them. But for example, I would much more easily buy euro pound on a breakout from this channel. Actually, I might consider taking that trade if we see that breakout. Okay?
You know, Steve, if you just put a flat line at 86 and what we're developing is an ascending triangle, you actually have a pretty good upside target. So 86 resistance and what was it, 82.75 low. I mean, that's projecting 89.
88 is
Yeah.
is a nice confluence of resistances. So
Yeah.
I think above 86 we should at least see
I like
another
that
200
one.
pips for 88 cents.
I
So
like
yeah, I agree with you. But we need to see, you know, a break above 86. Actually, if you want to be a little bit more aggressive, you can even buy it earlier when it breaks the channel instead when it breaks this,
Yeah.
you know, short-term double top. If you want to be more conservative, you buy it above 86 and target initially 88. If you want to be a little bit more aggressive, you buy it on a daily close above this descending channels trend line resistance. You know, it depends on everybody's.
And if you're a
trading style.
mashugana like me, you look for a place to buy it down here, maybe one more, you know, testing the lows, divergence.
Oh yeah, I mean, even
and,
more aggressive,
but
as
just
I
so
said.
you pay attention, you put a piece on, small
exactly.
piece, so you pay attention.
Even more aggressive, you buy a little bit now
Yeah.
as we are, and you put your stop loss below Friday's low.
Right.
I mean, less chance
Something.
of that playing out, but if it plays out, you will have a very good entry point for at least part of it. Then you can add a little bit more once it breaks through the channel, and then you can add a little bit more once it breaks through 86. Then you can have, like, let's say, a cost average position, let's say at 85 and change, and you have a very nice trade to manage.
Much easier to add when you have a lead.
Oh yeah, absolutely.
Psychologically, anyway.
It is because you get your cost average. The positive with jumping a little bit the gun is that if it works out, if it plays out as you expected, then you can keep averaging in by keeping your cost average in the money, and keeping your cost average in the money, as you very well said, Dale, from a psychological perspective is very beneficial, right? I mean, it gives
it's easy
you...
to be aggressive when things are working, and adding on is always aggressive. So, yeah, good coaching today, Steve. You're coach, and I'm Steve. Forex Gals, no interview today. JM had a family emergency with his father, but a great interview tomorrow. For everyone who follows Commitment of Traders reports, Leo Hermosa contacted me about a month or two ago. He's got a new tool that he's going to probably demo and show how he could make it easier for you to filter through CLT stuff. So
that sounds
should be
interesting,
great.
actually.
Yeah,
I'm actually
going to
make
Leo?
sure I don't. Yes, I'm actually going to have make sure I don't have a meeting. I wanna watch that.
Okay. All right. So everyone,
I want to see if he has actually found indeed a nice way to make use of the data. You know what I mean?
Yeah, he sounded very
Practical
excited
news.
about it. So
Okay, I want to say it.
yeah,
Coach, one last thing. We had a question
Okay.
about platinum. I showed last week that we got rejected from this ascending channels, trend line resistance. We're pulling back, but keep in mind that we're still trading comfortably above the long-term descending trend line resistance. So bottom line, what I'm saying here is that we might see more weakness, but I wouldn't be aggressive in selling platinum because this might be just corrective. Okay, so watch 950 as an area of support. We're actually testing soft support as we speak. If this doesn't hold, watch 950 as the next area of support. Thank you, Coach. And
You're welcome, Steve.
thanks, everybody. And don't forget, this is your last day to take advantage of an offer you're not going to see until next September. The markets has started looking like it's becoming more interesting, and I can tell you as a fact that our patterns in play perform even better when the market is volatile. Makes sense, of course, that that applies to everything. I mean, more volatile market, more clear patterns, better performance. I think this is a golden opportunity for you to join us. Thanks, Coach.
You're welcome, Steve. And if you had a great week last night and things came in your way, don't forget, don't just count your pips, count your blessings. Adios, everyone. We'll see you for Turnaround Tuesday. Good hunting. And thank you, everyone who signed up and has become part of our family, our trading community. I'm a big believer in communities. We commune ideas with each other in the chat room. It's a mastermind group, in my opinion. I'll see everyone tomorrow. Enjoy. Adios.